Good morning, everybody. Welcome to the Flow Show. Hope you're all doing well on this fairly quiet day today. Looks like we're well and truly in the midst of summer markets at the moment. Morning, Kate.
Morning, Ryan. Morning, everybody. Yeah, I'd say wake me up when it starts to move. Well, stuff is a little moving, but we don't have much to stick our teeth in right now, have we?
No, exactly that. And we've got even less to stick our teeth into this week because our wonderful stats department has decided to delay Friday's retail sales report till the following week, well, 5th of September, actually. So 2 weeks, absolute shit show, useless bunch of... Anyway, let's move on, shall we, before I really start letting rip. Right, as you can see there, we've got a 40% discount. Oh, now my squawk's going off. Let's silence that. Yeah, we've got a 40% discount going off on site at the moment. Take advantage of that. Running through the summer, don't miss it. Get yourself in our chat room where we're still managing to eke out some trades even amongst this quiet period at the moment. There's always something to be had in markets, so take advantage of that one. Right, let's go over what's been happening. Not a lot on the news front. Might be another quick show today. I'm going to start in Japan, and one of the LDP politicians, Kono, says the Bank of Japan must gradually raise rates and reverse the weak yen. Says it's better to start early on rate hikes. They've only been in hike mode for 2 years, hiking massively. Oh, clowns. It also calls for a new framework for Bank of Japan tightening. So I don't know what that means, but I don't think anyone cares at this point. It's also been reported by the Nikkei that Japan is going to apparently look to create an economic security fund to build up their supply networks for critical products. They're going to look to fund companies that expand abroad in areas from, as the article coins it, chips to ships. So a whole host of things they're looking to do on that front. A bit like a lot of other countries as well, building defence packages and whatnot and re-upping supply chains, getting away from others. So that's something we need to keep an eye on how much they're going to potentially put into that. There's been a bit of relief for the old Hong Kong dollar at last. Been glued to the top of the band, up at that 785. I'd been keeping an eye on it now and again, but I saw no reason to start shorting it. It's dragging on, and it's potentially going to cost you a bit of money sitting that way. But there's been a bit of movement. That's due to a rise in the local overnight interest rates, HIBOR as it's called, which had collapsed to basically zero over the last couple of months, which had seen the Hong Kong dollar move up to the top of that peg. They had been intervening in that pretty much all the way through to little effect, but now it seems those rates are on the move, and there's been some inflows into the Hong Kong stock market. That's now pinged this pair back into the middle of the zone. So that's where we're sitting right now. Speaking of clowns, it's like circus week this week. UK Chancellor Reeves, according to The Guardian, is looking at replacing what's called stamp duty over here, and also council tax, which is for those not in the UK, it's a tax we pay monthly for public services, you know, waste collection, garden bins and all that sort of crap. So she's looking to potentially change the tax around. Stamp duty is something you pay when you buy a house. Okay, now she's looking to switch it the other way and bring in this tax when you sell a house. So for people like me who paid stamp duty buy my house, I'm now going to pay a tax when I sell my house. So they're going to hit me twice. Thank you very much. That's what they're looking at anyway. Now, I don't know whether that was wholly connected, but we did see yields rallying after that story. So I don't know if that had anything to do with it. Anyway, Kay, what are you making of anything thus far, Japan or UK or any other clown show?
Well, I mean, it's a bit strange because when you look at what they try to achieve is to find a way to raise some taxes. I mean, the amount that they are going to collect from that tax when you sell your house, I mean, it's not even sure if it's going to compensate for stamp duty, etc. I mean, I don't see the use of or why they would do this overhaul apart from like, oh yeah, it's going to be something different. I mean, and I don't know whether it's going to bring in more money into the UK coffers or not, or even the opposite actually.
Well, it should do, because in theory prices of houses keep rising. They have been going up and up and up, even if it's
Yeah.
small percentages. So if you're going to pay whatever the stamp duty is at the moment, I can't remember. If you're going to pay a couple of percent on a 500 grand house, then in 5 years' time you're going to be paying a couple of percent on a 600 grand house. So it would be more money, as long as house prices keep rising. Of course, if they come down, then you're going to be better off. But they would have done the sums, and they would have calculated that they'll get more doing it that way than not. Otherwise, they wouldn't bother. That's governments in a nutshell. But who knows? We don't know the rates. We don't know the levels. We don't know anything yet. It'll be a fuck up, that one way
Well,
or
actually,
another.
it could actually mean that before they put it in place, people are going to be pushed to the exit and selling houses in the housing market could actually see a pretty decent drop if sellers are lining up to get rid of their houses before they start to pay taxes on the sale price.
Yeah, that's right. They're estimating it will be that this tax will come in on houses over 500,000. So
Yeah,
anything that's knocking around the 510, 520 mark, you can expect prices to drop. But the other thing is, people who are first-time buyers don't pay stamp duty, but probably with this tax, they will then be taxed when they sell, so they will be getting hit. Again, that's probably more money that they'll get that they wouldn't do otherwise. But yeah, until we know the details, who knows? As I say, we know it's going to be a shit show one way or another. Speaking of housing, we had a bit of data out from the US yesterday, the NAHB Housing Market Index, which came in a little bit softer than expected. Was expected to go up to 34, but it fell to 32. This starts a bit of housing data that we've got coming this week. Starts, permits, I think existing sales later in the week. I think we might have those starts and permits today. Yeah, there we go. Housing starts and building permits today. The housing market not showing too many wobbles at the moment, which is surprising, because if you think that the economy is going to take a bit of a turn, it's usually the housing market that can show you where that's happening first. But there's nothing really of note going on in the housing market at the moment. The US got its ratings affirmed by S&P last night. They remain at AA plus stroke A -1 whatever the hell that all shit means. The outlook is still stable, but there is some risks from the deficit numbers coming out of the States. Otherwise, that rating keeping on hold. Really, it's all been about this Ukraine, US, Russia stuff over the last few hours, overnight, yesterday afternoon. We've had the meeting of the Wombats, which included Zelensky. He came out yesterday saying it would be impossible to give up territory to Russia. And as we've been saying, this is a big crux of the matter in terms of how a solution might come around, who needs to give up what and reclaim what. But Zelensky saying it's impossible to give up any territory to Russia. Russia's Foreign Minister Lavrov says Russia opposes any scenarios that envisage a deployment of NATO troops in Ukraine. This is although Putin has agreed to some sort of security measures which will involve NATO members whether they're wearing that hat or not. I don't know how that's going to play out. EU Council President Costa says together with the US, the EU will continue working towards lasting peace that safeguards Ukraine's and Europe's vital security interest. Trump, speaking before the meeting in Washington, said that substantial progress is being made. There's a possibility that something could come out of the Putin meeting. He says if everything works out okay, we'll have a trilateral meeting. He wouldn't say whether this is the end of the road, and believes that Putin wants to end it. And funny, he says that because one of the microphones in the press conference, just before the press conference started between Trump and all the EU bods, caught Trump saying that Putin wants to end the war. Some are saying for him, and that he wants to get something done. So make of that what you will. He says he likes the concept of a ceasefire, but doesn't think there will be one. We can work on a deal where we aim for peace while they fight. They're going to be discussing this Article 5 thing today. That's obviously yesterday. He then said he had spoken to Putin indirectly and will have a call with him after the conversations with those EU leaders. And then he said after that conversation that Putin agreed Russia would accept security guarantees for Ukraine. And Trump said, in a week or two, we will know whether we can solve this. The Kremlin aide, speaking on that quick call, said Trump and Putin discussed raising the level of Russian-Ukrainian representatives in negotiations. Zelensky says he's ready for a trilateral engagement. And this seems to be a bit of a step forward because Putin has refused to acknowledge Zelensky as leader of Ukraine. That's been one of the sticking points throughout the whole war. But if he finally does, he's got to negotiate with someone anyway. German Chancellor Merz says we would like to see a ceasefire from the next meeting. Busybody Macron says a quadrilateral meeting with Europe should follow a Putin trilateral meeting. Never wants to be left out. NATO's Rutte says it was a very successful day. And then Russia's Special Envoy Dmitriev says it's been an important day of diplomacy focused on lasting peace, not a temporary ceasefire. So things are still trucking on. The momentum is still there. There's going to be further meetings. There's talk that details of this, an outline, shall we say, of a security agreement might come in between a week and 10 days, and other meetings might happen with Putin over the next couple of weeks, maybe in California. So there's still lots of things going on in this one. On another conflict going on in Gaza, apparently the latest Gaza ceasefire proposal includes a temporary suspension of military operations for 60 days. Apparently Hamas is on board. As they say, it aligns 98% with the Witkoff proposal that Israel previously agreed to. So we may get a little bit of a hold off over there, which will be good for all. In the meanwhile, UBS, they've raised their gold forecast for the first half of 2026. They now see gold rallying to $3,700 by mid-2026 on the back of the Fed and their dollar outlook. That's it on the news front. Anything you want to comment on amongst that lot, Kay? This risk thing not really hitting the market, but I've noticed gold isn't doing much either.
No, because the gold doesn't know whether to trade on the back of opium, that there may be some sort of a deal in Ukraine, and or whether it's all going to be another failure. I mean, let's face it, Trump just wants to have those 2 extra meetings and the 3rd trilateral meeting to do a victory lap, saying that he brokered some sort of a deal. But that territorial dispute, I mean, Zelensky made it clear that the Russian demands are well over the top, which are clear. I mean, this is just the result of the invasion that Russia wants, and even a bit more. So I'm still not sure that that we are going to get a deal there, which is the one that is perhaps a bit hopeful is that Russia seems to agree that there would be some sort of NATO involvement, as we already spoke about yesterday. But I guess it's another condition that that they get their territory. So I'm I still don't see the result. Yeah, it's a positive that everybody's talking. But then Trump saying that Russia wants a deal to Macron. In the meantime, the drones are still flying, and actually both ways, because then there's some Ukrainian sabotage ongoing on oil pipes in Russia as well. So I don't know. We everything is still wide open. On the rest, yeah, not a lot to say. We see what the markets are doing right now, which is very little. So summer lull plus uncertainty plus waiting for Jackson's Hole. So it's yeah, it's all up in the air really.
Yeah, very much so. As said, we do have a bit of data out today. We've got those US housing starts and building permits. We've also got Canadian CPI. So if you're trading the loonie, you keep an eye on those. And as I've been explaining, particularly with the US data of late, if you get a really big variation in the numbers that looks super hot or super bad, don't think I need to pile into dollar shorts on the back of that. Keep an eye on bond yields because they're acting as a bit of a guide as to how much the dollar might move over volatile things like that. So just be careful in trading data. Keep an eye on yields because it's giving you a guide how much markets might move. You know, a bad housing starts in these summer markets is different to one, you know, in a busier time, shall we say, when markets are fully involved. But anyway, that CPI from Canada, we're expecting headline CPI to come in a touch softer at 1.7% versus 1.9%, though all the core and other measures looking there or thereabouts. This core number, where's the core number? That core number there, 2.7%. No expectations for that. So look to see if that comes in hotter or softer. Then we've got the common, medium, trimmed, and all that stuff, which is, I say, looking there or thereabouts where we are expected. So for this one, don't think it's going to mark a big difference to the Bank of Canada. Only that if you keep an eye on CPI, just to the margin, it has maybe found a bit of a bottom. It is expected to drop back to 1.7%. So the risk here, if it comes in unchanged or even higher than expected. We've seen that in the US. What tends to happen in the US can translate across to Canada as well due to their close proximity. So just keep an eye in case inflation starts ticking up a bit. It wouldn't be a surprise. And also some of these numbers as well, if they start ticking up a bit, that just may further keep the Bank of Canada on pause and push them further from further cuts. So that's what we're looking at that's what I'll be looking at from inflation anyway. And then is it overnight? We've got the RBNZ. Is it in the early hours or is it later tomorrow? Oh no, there we go. So early hours of Wednesday, we've got the RBNZ. Keep an eye on that one as well. Expected to cut to 3%, 25 pips to 3%. We've also got these Chinese rates as well coming through. So if you're up that late, keep an eye on that for the RBNZ. Right, let's have a look at what's going on. Already looked at that. I'm not really looking at getting in anything new, except for maybe in the Kiwi. I might stick a little order in this one. I doubt we're going to get there. Let's come into the shorter one. But if the RBNZ do stay pretty dovish, indicate they're willing to continue cutting rather than going on pause, because this rate cut will put them bang in the middle of their neutral rate. We could see a little bit of a sell-off in the Kiwi. If it gets down to this 58.40 level, as I say, I might stick in a couple of orders 58.50 is probably a bit of a hope trade. We're probably too far away, but I'd consider that as a bit of a stretch point if we get down there on that one. Another one I'm looking at, Aussie Kiwi, which has come off a little bit. Maybe we're going to move up into 110, or maybe not. Maybe we get a bit of a pullback in this one. And I think any pullback in Aussie Kiwi probably gets bought up pretty swiftly, because this one still looks fairly bullish, at least in the short term. You got any plans for the RBNZ, Kate?
Not really, Ryan. Since Orr left, I'm still not out of whether or actually, now is this the first RBNZ meeting of the new head? Really, officially, could be that we need to find out exactly what the new bots are doing. But I'm taking a bit of a bet there on Orr because we know he left with he left early. So yeah, I don't know exactly how we will need to read the RBNZ. I'm not planning on doing much really. It's been very, very, very rangy, but underperforming stuff like euro dollar, even the cable into to a certain way. As I said yesterday, the antipodian's been quite underperforming. So yeah, I think on a bit of a dovish, I think you might get your 58.5 actually. Just looking at how underperforming those two have been, Kiwi and the Aussie. And actually, if you look at most of the currencies, like Canada, is still also pretty weak. I think the CPI there this afternoon may give the cat bears perhaps something to stick their teeth in, but it's like an overall commodities thing right now. We're seeing that those commodities have been a bit on the sluggish side as well. Yeah, so I think you may get your 58.5 if they're dovish enough.
Yeah, I don't often leave orders overnight for things like this, but summer markets, I don't know, it's looking a decent enough level down there. So as I say, it might be worth a bit of a stretch point. So yeah, I might give it a little go and put a pretty tight stop on it. I don't see any reason why the Kiwi should collapse, fall out of bed, but who knows? That's one thing I'll be looking at anyway. Right, I'm just going to go over a couple that I'm just basically managing, just sitting there trying to manage, as I say, rather than doing anything fresh. Dollar CAD, that's having a little creep up. We've had this sort of 138, 10, 07, 20 area, pulling up now. We had this 138, 10-ish. We've broken that. We found new resistance 10 pips above that. We had a little poke yesterday. We're having a little poke today. Again, quiet market, so it's not looking like it wants to run too far. I'm still long in this one from further down, so I'm looking for another move up to at least these highs, or even a break of these highs up here, this 38, 60, 70 area, which has been a bit of a historical one. I think if we do get a break through this 20 level, we might just run into trouble against that prior high in the 30s. Otherwise, I'll be looking at 45, 50-ish, just about in there, across there, just to see if we maybe get some resistance coming in ahead of that high there. But see what happens on the CPI. If we get a strong number, then this could be set for a little bit of a dip, and then I'll be looking lower down. Maybe I haven't as yet done any adding back to my position. I did a little bit, but if we get a move back down here, which is quite far, but you never know, I might look to add a bit more into that one. Dolomex, that's still looking okay. We're just trying to hold this old fib level here, the 50 retracement. We had this starting to hold here, 1869s. So we're marking a decent bit of stepping up after that last look at the 1850. Holding here will be another positive step. We are just eking out new highs since that low. So we had that high at 85s. We just poked through it a little bit, 86.5. So it's looking like it's willing to keep pushing up. In the wider picture, 19, 18, 50 is the bigger range. And we won't be doing anything unless we're busting one way or another out of that one. So I'm still short down here. I trimmed off a lot of my entries that I had around this sort of area previously. So I'm just long now from the 1850s. But I'm still a little bit short from up near 21. So that 19 is going to be pivotal for what I do with that short. The only one I've got is Euro Sterling, which again is looking a bit more constructive, at least over the last couple of days. We had this push to the 86s, it held. We've had a little bit of a step up now, support back to this 86.20, which is a bit of an on-off level. But now we need to see what happens up here into this zone. We could creep into it. If we do, I expect to see a bit of resistance, 86, 50, 55. But really, I want to know what it does, whether it holds or whether it breaks out of this zone. If we do break out the top, I want it confirmed as I'm long, and maybe we get another push up, run towards the 87s and those prior highs. But if we're coming back quickly from a test of this 40, 45 area and we're running back under 20s, that will just keep this bearish momentum going over the last couple of weeks, and the possibility that we are going to be heading lower because this low just came below this low. So it's just showing after this move off the top that it's got the chances of heading even further south. Right, Kate, I'm going to ping it over to you, mate, because not a lot else to look at on my side.
Okay.
Do that. There we go.
Right. Euro dollar, really. The interesting one is that it found bids right under that. We did a bit of a move there under that 116.5 in the Asian time, and it really quickly got hovered up. So that means it's still looking quite positive, I'd say, all in all. But we are, let's face it, we are in ranges waiting for what's to come next, and we may even have to wait until Jackson Hole to really pick up the next direction in the dollar in general, and also in the euro. But I think the euro is held up by some some positive vibes, some hope that Europe is not going to be left alone or left outside of all those discussions surrounding Ukraine as well. We have seen regular demand in most, always be careful what we say, but most of the European crosses. Euro sterling is better bid, euro yen for sure, but euro Aussie, euro Kiwi as well. They're all still pretty bid, and that is helping the euro also to find demand whenever we come down. As I said, this being said, we are in a range 116, 117 and a half ish. And we will trade in between until then. I see, Ali, you're a little bit long. For the time being, it is. Oh, you're long at 80, so that's right here. Yeah, it's possible that we go up to 117, 15, 20, but just because we are finding bids there. But also don't forget that we are in these summer markets. We can have a few flows out of the blue because a corporate or an asset manager needs to do something. So always bear that in mind. But I guess your stop and take profits are relatively reasonable. Moving over to the cable. Interesting is that this is the August move. Is that we held the 23.6 of the August move, which is also the 200 moving average on the hourlies. So that's the support intraday, I would say. If we get back below there, we may see a bit of a move more low into mid lower 134s. But again, do we have any strength to take it one way or the other? Ryan, help me out there on tomorrow's data in the UK. Are those also final ones, or is it like the regular
What,
CPI or
CPI?
PPI? Yeah.
No, it's fresh. We
It's a
don't do
fresh one,
flash
yeah?
numbers.
Okay, so
Yeah.
tomorrow, early doors in the UK, we will probably have a move in the sterling, all right? So then you look where we are when we enter that level, whether we are that news, whether we are closer to here. If we hang just around that 135.40, which is really the midpoint of that little range here, then we will have like 40, 50 pips to play with. We can see this prior high here around 90, the high around 95 the other day. We just had a quick overshoot of that high, but then quickly came back. That's really the gateway to 136.5 again. Okay, so uh, really, I mean, in summer markets, it sometimes just goes to the extremes, and then the move just dies out, and we come back to the middle. For as long as we don't break those levels, don't go pushing. I would say we are still in a range there. Interesting one is the yen, and it's interesting. Even though we see this range getting tighter and tighter, we're also seeing bids creeping in higher and higher. It still, despite actually the Japanese yields being higher as well, we know that the US yields are a bit higher, but I mean, it's been really a yo-yo. It does seem still that the market is on the bid side of those yen crosses. If you look at the yen crosses, we're still at 172.5 in euro yen, close to 200 in sterling yen, for instance. They still seem to find buyers. And also, if you look at, you think about those promises for investment that Japan is doing, and not only in the US but a bit here and there. Those shipping companies, etc., chip companies as well. It just seems like flow-wise, we still see some selling interest in yen, which in turn is keeping the dollar yen up as well. So going into Jackson Hole, I wouldn't be surprised that we hang around here. But the risk is for a little look up to, I think, 149, even maybe before, if there's enough rumors or thought going in that Powell may not announce too much. So that, but then again, it's after that is going to be up to Powell to give us a real direction, I think, here. But for the time being, this looks like still relatively well supported. So we already held the 148.5 overnight, and this low, did I say 148? It's 147.5. And those low 147s remain a bit untested. But all of that is short term, okay, guys? Don't look for longer term stuff right now if you're not in a position, because we just don't know what's going to happen, whether it is with risk or in Jackson Hole. Okay, so everything here is really short term stuff right now, but longer term, it's a difficult call, really. Longer term, I would say. Um, Yeah, your long Euro Swiss. I've just looked at it. It's disappointing that we couldn't get above this 94.45. This is really gonna have to go sooner rather than later, I think. Otherwise, a move back down below, as you can see here, a little bit of a, what is it, pennant, or a little bit of a flag, or a little bit of a intra move channel, support around 94, 93, 95. If it gets below there, I think the short termers will be disappointed, and we're still in this big range. Okay. If it holds 94, our hope is still there, but this is still a very disappointing pair, unless you put it in a bottom drawer and don't look at it for months on end. yeah, I mean, it's not something to get overly excited about. All right. What else am I looking at? A little bit of that dollar rand. We're not going yet, but we're still respecting, sorry, that triple low. We haven't retested it, unfortunately. I was hoping for a retest, but maybe I'm hoping for too much. But on the other hand, those little spikes here, they are stopping right where the prior lows are. So it's not a done thing yet that this dollar rand is going to rally again. We are really going to have to break above 1768 to keep going. Um, I took it off on the blip, but I'm a bit hesitant right now. I really would like to see either a retest, although, as I said, maybe too much of an ask right now. But if it goes through 1768, I think then we can safely say that we are going to move higher again. Contrary to my opinion, let's say, for instance, on the mix, where I'm looking either still to be a bit long mix because of USMCA, the proximity, Mexico not completely going down under, the rand, I mean, in the opposite. I being part of the BRICS, being part of yeah, what is expected to where the tariffs will remain high. I'm looking rather at the other side in general in the South African rand. Okay, but patience is the message there. Gold, silver, absolutely nothing to report. As we said, gold is still waiting for what's going to drive it next, and really you can trade it. Obviously everybody is free to trade whatever they want between 33 and a quarter and 33.55 or 33 three quarters, but really we need to break out of 33 three quarters to get a look back at 34, or start to break below this one here, 33.0510ish, and then we can see a push lower. For as long as that doesn't happen, to me we're in a range. Same thing on silver. Range is tough. But we are seemingly building a little bit on that short-term channel that has formed, because we tested it overnight and it held around that 37 three quarters. So that is a bit of a line to hold on to if for those who are trading it more on the short term. I'm trying to look if we get a retest at some point of that 37.40-ish, and to perhaps add to my long-term longs again, but for the time being, I'm just being very patient. What are we talking about in the chat before I give it back to you? Why the dollar is holding foot this week? Yeah, you're asking a question, Ali, but then you give all the answers. Okay, so yes, I mean all of that is true. Powell. FOMC, resilient job market. We have the resilient job market is one where we could start to argue, especially with early September, before the next FOMC, we will have another jobs report. So that is something that we don't know yet, because if we get another weak number, then I think the market will firmly stick its teeth in perhaps a series of cuts coming, because the jobs market is extremely important right now. And for the rest,
Yeah, I don't think anyone's talking about 50 basis point cuts for September, Ali. I'm not sure where you're seeing that.
well, I mean, if it's a really stinker on the jobs report, the bets are going to be there again, I would say, though. Maybe if we don't get it in the end, but people will start to talk about it again, I guess, because that's just the nature of this market, and the analysts always want to call for the big move, because that's how shall I say, justifying their job basically. Ryan, back over to you, mate.
Thanks, mate. Ali, on euro sterling, why am I bearish the pound? Because at the moment I'm very bearish the UK. Again, you're finding the same reasons why the pound's being a bit more resilient than I would like. That's because we've had inflation ramping up as well. We got the latest report tomorrow, which is expected to see inflation going up again. So you got a weakening jobs market, a weakening economy, and hotter inflation, looking pretty similar to what's going on in the US in terms of inflation as well. And yeah, so that's. But I'm looking at this one for a longer term. I'm not in it for a 20, 30 pip in and outs, Ali, like you probably are on your trade. So I'm looking for a quick one on this one. I'm looking for a longer term move on this one. Right, that's that. As I say, keep an eye out for the data later on today in the RBNZ. Last thing, Ali, just on your stop, you are 1 pip above on your euro dollar above the low of the day. That's something you may want to think about. I've actually got a level at, I'll just show it really, really quickly. I've got some time. I've got an old level here at 30 that we've just turned around plenty of times when it's quiet, when nothing much is going on. It's become a support resistance point. But yeah, your current stop is a pip above the day's lows. So just want to maybe think about that, maybe tuck it under by a couple of pips, just in case we have another move down. You don't want to be pinged at the low again that holds and then it bounces your way. So just think about that one. Right, aside from that, have a good day, everybody, and we'll see you all tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.